MercadoLibre Inc., trading under the ticker symbol MELI on the NASDAQ, is currently closed as of today, Sunday, January 18, 2026. The most recent trading session on Friday, January 16, concluded with the stock price at $2,075.01, marking an intraday decrease of $23.84 or 1.14%. Throughout that final session of the week, we saw the price fluctuate between a high of $2,110.03 and a low of $2,061.62, reflecting a tightening range that has many retail traders and institutional desks watching the next move with bated breath. While most of the market chatter right now is centered on the trillion-dollar movements of NVIDIA stock or the latest hardware cycles affecting Apple stock, there is a much more complex story unfolding in the Southern Hemisphere that many investors are missing. The immediate insight you need to grasp is that MercadoLibre is no longer just a high-growth e-commerce play. It has effectively transformed into one of the largest credit engines in Latin America, and that transition is exactly why the stock is showing this current volatility. While the surface-level narrative suggests a simple retail pullback, the deeper reality is a massive strategic pivot where the company is sacrificing short-term margins to build a permanent moat in the fintech space. This is a classic expectation versus reality trap. The expectation is that as a company scales, its margins should expand. The reality for MercadoLibre in 2026 is that as they scale, they are intentionally depressing their own profits to fund a credit book that has grown by a staggering 83% year over year, reaching roughly $11 billion. Many people still view this company as the Amazon of Latin America, but that comparison is becoming increasingly outdated. Amazon relies on a robust existing banking infrastructure in the West. MercadoLibre had to build its own, and in doing so, it has created a level of ecosystem stickiness that even the big tech giants in the US struggle to match. If you are using online investment tools or managing an individual brokerage account, you might be tempted to look at the recent earnings miss, where the company reported an earnings per share of $8.32 against a consensus of $9.88, and think the growth story is slowing down. But that miss was largely driven by a massive $500 million investment into shipping subsidies and credit expansion. They aren't losing to competition, they are spending to ensure the competition can't even get a foot in the door. When we look at the recent daily swings and institutional activity, there is a clear divide. Recent SEC filings show firms like Dupree Financial Group have been trimming their positions, while others like Pictet North America Advisors have been aggressive buyers. This tug-of-war is happening because the market is trying to price in the risk of Argentina's renewed inflation volatility, which is sitting above 30%, against the explosive growth in Brazil and Mexico. For those using Fidelity Investments, or a Fidelity trading platform, you'll notice that MELI's beta sits around 1.42. It moves much faster than the broader market, making it a favorite for those involved in self-investing, but a headache for those seeking a quiet ride. Even on Robinhood and the Robinhood app, where Robinhood stock trading often favors high-momentum names, we see a shift toward more seasoned investors holding MELI for the long haul rather than the quick flip. The volume on Friday was about 547,103 shares, which is slightly below the average, suggesting that the weak hands might have already folded during the post-earnings dip. If you're checking your SoFi account or using SoFi Investing for SoFi stocks, you've likely noticed that the valuation currently sits at a forward price-to-earnings ratio of about 50.6. By historical standards for this company, that's actually relatively modest, especially when you consider that revenue is still growing at nearly 40%. The core of the business model is a three-pronged attack: the marketplace, the logistics network known as Mercado Envíos, and the fintech arm, Mercado Pago. The hook is the marketplace, bringing in over 115 million unique buyers in the last 12 months. But the real engine is Mercado Pago. It has 72 million monthly active users and has become the primary digital wallet for a region that was historically unbanked. This is why the Fidelity Wealth Management crowd and those looking for investment help are starting to view it more as a diversified financial services firm than a simple retailer. When someone buys a product on the platform, they often use a Mercado Pago credit card, and they get that product delivered via a MercadoLibre truck. The company captures the transaction fee, the interest on the credit, and the shipping margin. For those of you navigating investing sites or perhaps using interactive brokers and the interactive brokers trading tools, you know that the expectation for a company like this is that it should eventually look like a mature utility. But the reality is that MercadoLibre is still in an aggressive land grab phase. They are building massive fulfillment centers in Mexico and Brazil, increasing their total capacity by 41% in the last year alone. This costs a fortune, and it's why the net income margin dropped to 5.6% recently. Critics will point to Tesla stock and argue that focus should be on efficiency, but MercadoLibre's management is playing a 20-year game. They want to be the infrastructure of the entire Latin American economy. Comment below how many shares of MercadoLibre you currently hold and whether you think the credit risk in Argentina is being overblown by the media. If you are using Schwab Intelligent Portfolios or an intelligent portfolio service, you might find that these automated systems are cautious on MELI because of its high volatility and exposure to emerging market currencies. However, for the self-investing crowd using an individual brokerage account, the current price point of $2,075 is sitting right near the 50-day moving average of $2,049. Historically, this has been a zone where buyers step back in. The tension here is between the fear of a credit crunch and the reality of a dominant market position. If the credit book continues to perform and delinquency rates stay manageable, which they have so far, with net interest margins after provisions at a healthy 21%, then the current price might look like a steal a year from now. Looking at the competitive landscape, the pressure from players like C Limited's Shop-E and Amazon is real but localized. Amazon has been aggressive in Brazil, offering free shipping and investing in its Prime ecosystem, but Amazon doesn't have the lending data that MercadoLibre has. Because MELI sees every transaction a merchant makes, they can offer credit with much higher precision and lower risk than a traditional bank or an outside competitor could. This is the hidden value that doesn't always show up on a standard Fidelity mobile app chart or in basic online investing summaries. It's a data advantage that creates a virtuous cycle. More data leads to better loans, which leads to more merchants on the platform, which leads to more data. For those of you using SoFi Invest or SoFi Active Investing, it's important to understand the macro pressures. Mexico's GDP growth is projected to slow to 1.5% in 2026, which could impact consumer spending. However, MercadoLibre has shown a remarkable ability to grow even in stagnant economies because they are facilitating the shift from physical to digital, a trend that is still in its middle chapters in Latin America. They are essentially a tax on the digital growth of an entire continent. When you are looking to invest online, you have to decide if you believe in the regional growth story or if you are more comfortable with the domestic safety of something like Fidelity mutual funds or Fidelity ETFs. As we look toward the rest of 2026, the catalysts to watch are the continued monetization of their advertising business, Mercado Ads, and the stabilization of the credit portfolio. The advertising revenue grew 63% on a currency-neutral basis last quarter. This is pure margin profit, similar to how Amazon used its ad business to fund its low-margin retail operations. If Mercado Ads can scale to represent a larger portion of total revenue, it will provide the air cover needed to keep the logistics and credit businesses growing without scaring off investors who are obsessed with the bottom line. Those managing their own Fidelity IRAs or Interactive Brokers account should be looking for that margin expansion as the signal that the heavy investment phase is starting to pay off. The reality we are seeing is that the easy money in the growth stock sector has moved on to AI and chips, leaving high-quality compounders like MercadoLibre in a consolidation phase. But don't mistake lack of movement for lack of progress. The company is fundamentally stronger today than it was when the stock was at its all-time high of $2,645. It has more users, more data, and a much more robust logistics network. For the investor using Interactive Brokers stock trading or the Robinhood app, the challenge is to ignore the noise of the daily 1% swings and focus on the fact that this company is becoming an essential part of the daily lives of 600 million people. In terms of future scenarios, if the Latin American economy sees a broader recovery and interest rates begin to stabilize, the expectation for MELI likely will shift from cautious to hyper-bullish. The gap between its current intrinsic value